BMNR stock has taken a beating over the last couple of weeks, falling from over $50 a share all the way down to $24.33. And that has got investors asking the question whether or not the thesis is broken. I think with the recent price action, it is only fair that there were some concerns going into BMNR's earnings, but as they released their full year 2025 results, they managed to restore some investors' confidence, at the same time also give clarity around the trajectory of the company. And what we hope to do is to look at this along with how some recent events have unfolded and together how they could potentially affect the valuation of BMNR. But as always, potential is a dangerous word, so let's dive in. If you have been following the coverage of BitMine over the last couple of weeks, you would know that I've been saying the main driver, the main long-term driver for this company is actually the adoption of Ethereum and not any sort of financial engineering. And so what is happening, or what BitMine is trying to do, is that it is building trust with Wall Street. And as Wall Street continues to build on Ethereum, this actually increases the adoption of Ethereum, which increases the demand for Ethereum. And so as Ethereum adoption increases, what actually happens is that the burn rate of Ethereum increases. This refers to the amount of ETH that is being permanently destroyed every year as more and more people are using the network. And so as a result, this actually reduces the supply of outstanding ETH. So with increased demand, lowered supply, what happens is that the prices of Ethereum would rise, and at the same time, hopefully BMNR as well, as it holds Ethereum on its balance sheet. And that's where we want to begin the discussion today, because what you're seeing over here is the stablecoin market cap that is currently being built out on Ethereum. This currently stands at around $185 billion, with Tron being the next closest competitor at $78.5 billion, still less than half of the market cap of what is currently being built on ETH. Now, therefore, you can actually say that Ethereum is currently the market leader, holding over 63% of the world's stablecoin value, and this higher transaction demand naturally leads to a higher burn rate, which as a result, causes ETH to be more and more scarce, which really ties into the thesis that we have just mentioned. And so beyond stablecoin, we're also looking at the application layer, and we look at that through the total value lock. This actually measures the total capital that is actively committed to applications and smart contracts within the Ethereum network. And so this currently stands at $330 billion. I think one thing you have to note is that this $330 billion is inclusive of the stablecoin value, and their closest competitor over here again is Tron with $78.5 billion, 4x smaller than the entire value that is being built on Ethereum. And like I said, because this TVL actually includes the value of stablecoin, if you compare Tron's application's TVL of $78.512 billion, this actually matches the stablecoin market cap of $78.512 billion as well. And this means that practically the entire application total value lock on Tron is comprised of stablecoins, and the economic activity on Tron is entirely focused on stablecoins and stablecoin transfers. And so really, to me, this proves that people are choosing to build the more complex systems on the Ethereum network, and that is one of the moat that Ethereum have over the other competitors. And this final graph over here actually shows another aspect of the Ethereum narrative, and that is the moving of the real-world assets onto the blockchain. And we're already seeing some of this start to happen with the biggest financial institutions in the world. Companies like BlackRock, Franklin Templeton, as well as JP Morgan have started to launch their own tokenized funds. And if you look at the market cap of the entire tokenized funds, you can actually see that Ethereum is by far and away the chain of choice, with over $17 billion worth of assets already tokenized on their network. And so with this number, Ethereum actually holds around an 81% market share of the entire tokenized real-world assets market. And if you remember what Tom Lee said during his initial presentation over the thesis of BitMine, the entire banking system is currently worth around $3.8 trillion. And if we are just looking at money market funds by itself globally, we can also see that there are over $7 trillion worth of money market funds that can be tokenized. So this graph doesn't just tell us that Ethereum is the current market leader, it also tells us that there is a long runway for adoption and that this growth can actually continue to take place over the coming years and decades ahead. And if you take a look at some of these news reports that support this graph, you can actually see that BlackRock have launched their tokenized money market fund. This is not new news to us. I think I've mentioned this before. JP Morgan has also tokenized its private equity fund, as well as launching their own deposit coin, which is slightly different from a stable coin because this is being backed by its own deposits, right? And Franklin Templeton is working with some of the banks in Asia, some of the financial institutions in both Hong Kong and Singapore to launch their money market fund. And more recently, after Thanksgiving, recording, we also saw Amundi. Amundi is a French asset management company, which is the leading asset manager in Europe, roll out its first tokenized money market funds on-chain as well. And I'm telling you this because earlier on we asked the question whether or not the BMNR thesis is actually broken. And from everything we are seeing over here, unless people are happy to throw away billions of dollars, the thesis is very much intact. Now, adoption is happening because Ethereum is the most reliable layer 1. And I've seen people in my previous videos ask about the possibility of other chains competing and perhaps even doing better than Ethereum in the long run. While I do think that there's a possibility of competition, in fact, there definitely will be competition in the space, I have to say that I'm not someone who has been super steeped in the crypto economy, but from what I've seen over the last 4 to 5 months and from that limited understanding, it seems like a lot of these other competitors, while they are real competitors, they cannot offer the full functionality of what the Ethereum network offers, and because of that, they are likely to offer more niche solutions to the financial landscape, right? And so the reason why you are seeing a lot of this initial adoption happen on the Ethereum network and why Tom Lee is suggesting Ethereum is the network of choice for Wall Street, it's not because ETH is the fastest chain. It is actually because ETH is the most reliable chain. It has not experienced a downtime over the last couple of years, and that is the most important aspect for Wall Street. I think the problem over here is that a lot of people actually got excited about this company in the $50 to $60 range and expected BMNR to hit $100, even $200 by the end of the year, which would have been an easy 2, 3, even 4x, which is why there's a lot of frustration at the moment with the price action. But personally, for me, I'm in this for the long term, and I'm looking at this the same way that I was looking at my investment in SoFi previously. As long as the fundamental metrics are tracking in the right direction, I believe the price will eventually follow. So I am not looking for a double in the next couple of months. I actually hope it stays in the $30 range over the next couple of months so that I can continue to accumulate even more. If you heard what Tom Lee has been speaking about recently on CNBC, he has attributed some of the weakness in price action around Ethereum to a mechanical glitch. At the same time, he also says that due to the largest crypto liquidation event on 10th of October 2025, we're actually seeing the fallout of this liquidation because there are market makers out there with holes on their balance sheet, and because of that, they are perhaps forced to sell the crypto that they're holding. And so this pressure from the liquidation usually takes anywhere between 6 to 8 weeks to pass through the system. And at the same time, on 1st December, just this Monday, we also saw a liquidation of over $600 million of leverage position being wiped out from the crypto markets once again. And I think it's actually healthy for the crypto space to deleverage, and then we can build upon a more healthy foundation. And a lot of these financial institutions, they're not just building on the blockchain, they're also actively investing in BMNR, with ARK Invest holding over 7.5 million shares, Morgan Stanley having close to 10 million shares, and JP Morgan with around 4 million shares. Now, I'm by no means suggesting that just because these investors or these funds are buying, that makes BMNR a safe buy right now, because we have already seen this year with, the April dips that institutions are not always right. But at this point, I guess you can say that betting against BMNR is like betting against Cathie Wood, Jamie Dimon, Larry Fink, and Peter Thiel among some of the other bigger investors. And I think for me, what is interesting over here is that all the names that I've just listed off, these are investors who have very different methodology and philosophy towards investing, and yet for all their differences, they all landed on BMNR, and to me, that is actually interesting and something worth considering. And so what this does for me is that it really proves Tom Lee's case that BMNR provides liquidity for Wall Street to own Ethereum, and in turn, that also means with this liquidity, BMNR continues to be one of the most liquid stock on the stock market that allows them to keep up the pace of buying ETH and to reach their 5% target, which makes them deserving of their MNAV. And then we come to the aspect of the entire thesis that makes Ethereum as well as Bitmine slightly different from the other digital asset treasuries out there, and that is the ability for them to actually stake the Ethereum on their balance sheet to secure the network. Now, if you're unsure what staking is and how it helps to secure the Ethereum network, I've covered that in previous videos, and I'll leave the link to those videos down below, and you can watch those videos to better understand how staking works, how it actually secures the network once you're done with this video. But in the past, I've used an example of a referee to describe the validators on the Ethereum network, and in order for someone to become a validator within the Ethereum network, you would have to stake or to put up 32 ETH as some sort of a security deposit. In the case of messing up, you can actually get penalized, or in the worst case, you actually get slashed, which means you would lose a part of that 32 ETH that you have staked. And so the distinction over here for Wall Street, considering the amount of money that they plan to move on chain, is that they cannot afford to trust the security and compliance of an anonymous group of unvetted validators without any real accountability. And that is exactly where BitMine comes in. Because you see, in their most recent earnings call, they actually told us that they plan to launch their very own Made in America validator network, short form MAVAN, MAVAN. And that is exactly what they have been putting in place over the last couple of months as people were complaining that they were slow and not moving and not staking their Ethereum, right? They have been actually running tests in the background among different institutional grade staking providers before, recently landing on the final 3 partners to launch a pilot program with. And what they're doing right now is to actually conduct live testing with each of these partners to test their staking capabilities just by using a small portion of the Ethereum. And so this test is basically designed to monitor the performance and to evaluate the pilot members' operations as well as service quality and how robust their entire system is. And this clarity that BitMine has given us regarding their processes behind the scenes really shows us their approach towards staking, and it helps to shift my perspective to better understand how Tom Lee and BMNR's management looks at staking. Because I think we really underestimate what staking means at the scale that BitMine is operating at. Of course, if you are thinking about an individual staking perhaps 32 or even 64 Ethereum, any downtime or slashing penalty is annoying, right? You probably lose tens of thousands of dollars, but certainly not catastrophic. However, if you're talking about, BitMine, even at the scale that they are at right now with 3 million ETH on their balance sheet, any slashing penalty or any sort of downtime would result in losses of hundreds of millions of dollars, and that is definitely going to be catastrophic for the entire network. So therefore, when they say that they're looking for an institutional grade staking facility, it's not an easy task, and it's definitely not as plug and play as we think. I think they're really talking about a provider that has high uptime, has a validator infrastructure that has redundancies that are built in place to prevent or reduce downtimes, as well as constant auditing and monitoring using the same standards as financial firms, as well as, having any sort of slashing and downtime protection protocols. And I think all of these are important things that as an individual validator, we do not really think about. And if you look at the wording used in their earnings presentation over here, they say that as we prepare to scale our own validator network, we will move forward with a select group of potential partners. And then they also said that they plan to partner with one or more of these pilot partners, plus world-class infrastructure providers to scale their own Made in America validator network in the coming quarter, which is Q1 of 2026. This would actually mean that there will come a point in time where they are no longer fully relying on these third-party partners and using their infrastructure to stake the Ethereum on their balance sheet, that they will have their own staking infrastructure in place. And once that is built out, they can actually offer potentially staking as a service for some of the larger financial institutions who wants to stake their Ethereum, because we are seeing companies like BlackRock who have actually launched their own staked Ethereum ETF, which presumably they will want to run on a trusted validator network, and that's where BMNR and MAVAN comes in. But this is just some of my projections based on the wordings that they have used, and as an investor, definitely I would always want more clarity, and I think we will get that in January during their Investor Day in Vegas. But I'm excited to see staking start to take place, and I think a lot of people were complaining that Tom Lee was taking a very long time with staking and leaving money on the table. But if you listen to the criteria for the staking partners that they're looking out for as they build out their own validator network, you can understand why it has taken them so long, because they're not concerned about speed, but they're more concerned about stability and reliability. And I think as a retail investors, sometimes there can be a little bit of a disconnect between what we are expecting as well as what some of these companies are building up because of the scale of investments that we are talking about over here. And I think as a retail investor, it can be very easy to forget the scale that some of these companies are operating at and say, you know what, just go and find a validator network and stake your ETH. But to us as retail investors, perhaps 32 ETH, like I said, even at today's prices, is worth over $90,000. But staking the entire 3.7 million ETH today is actually worth over $10 billion. And we're not even talking about the full 5% of Ethereum that they plan to have on their balance sheet. And so it comes with a lot more considerations. It's like someone having $100,000 in their portfolio versus $10 billion of your portfolio. The kind of risk appetite that you have for a $100,000 portfolio and a $10 billion portfolio is vastly different. And that is exactly what we're seeing play out over here. Finally, I want to talk about the 1 cent dividend that they have just declared. Honestly, there's not too much to say over here because to me, the strategy is actually quite straightforward. I think the focus really shouldn't be on the cash payout, neither should it be on the dividend yield, but really about how it positions BitMine as a company to the funds out there. And I think personally, with Tom Lee at the helm, I think the reason why he's doing this is likely because, he's the bridge between Wall Street and crypto, and he already knows people who are perhaps managing dividend funds who wants to buy BMNR but were unable to do so because of regulations. You see, the markets are actually full of all of these big funds like pension funds, retirement funds, even some institutional portfolios that are legally and strategically mandated to only invest in income generating securities, or simply put, they just have to buy dividend paying stocks. And so therefore, before declaring this dividend, these funds were unable to buy BMNR even if they wanted to. And I think by declaring this dividend, they're opening themselves up to a larger inflow of capital. You see, BMNR really is the first large cap crypto company to declare an annual dividend, and by opening up its door to these massive pool of dividend funds, they're opening themselves up to a massive pool of capital that has previously completely ignored the crypto asset class. And at least to me, I think this is a very smart piece of financial engineering, and I think we would expect nothing less with Tom Lee at the helm. Now, secondly, I think you can also see from its own presentation, by comparing themselves with the Max 7, the dividend really acts as a signal to the market that BMNR is no longer just a speculative play. They're trying to position themselves as a financially mature entity, similar to the tech companies that the financial institutions are familiar with. I think Tom Lee has already said it in a couple of interviews. Wall Street only understands it once it starts to make them money. And so that's what he's trying to do, position them in a way or using a financial structure that Wall Street can actually understand. And finally, some people argue that this dividend can actually act as a cushion to its MNAV, because dividends historically provide a buffer against market drawdowns and market volatility. Because of the income that is being generated by dividends, people feel less of a need to sell off the position. And this encourages long-term holding, and it creates a more stable stock price for the company in a market drawdown. However, the concern or the issue that I have with this statement over here is that the underlying asset, Ethereum, is actually a highly volatile asset. And so because of that, I'm not too sure whether or not how protected they will be just because of that 1 cent dividend. Of course, if you are comparing this with a scenario where BMNR doesn't issue a dividend, then of course that 1 cent dividend can perhaps, allow certain people or certain groups of funds to hold on to the company even in a market downturn. But if you are going to compare BMNR and their 1 cent dividend to someone like Verizon or even Coca-Cola, who are giving a much larger dividends, I don't think you're going to see that same level of stability in a market drawdown. And so whether or not this dividend provides some sort of stability during a market drawdown still remains to be seen. But at the end of the day, the main thing over here, the main strategy around declaring a dividend has to do with their own positioning, that they're signaling to the market they are not just a pure play growth company, that they are a high growth company with a stable and defensive structural layer, which is the dividend. And that is a key characteristic of any high quality enduring tech company, and that is where they're trying to position themselves. And so with this context, let's take a look at the recent disclosures during their earnings and how that affected their valuation. You can see this is actually updated on the 3rd of December. Now, I'm not too sure when exactly I'll be releasing this video, might be a couple of days or perhaps a week later. But early on this week, on Monday, on the 1st of December, we saw over $600 million of liquidation in the crypto market. And that is why early on this week, the price actually fell from the close at $33 on Friday after Thanksgiving to $29 on Monday this week. And the price has slowly started to recover over the last couple of days. And so I have updated the number of shares over here. You can see just over 384 million shares being disclosed in their last earnings. And even at around $34 right now, they are still trading above 1 times MNAV. Currently, BMNR holds around 3.726 million Ethereum tokens on their balance sheet with a total of $882 million in cash. I believe this cash acts as a buffer should the market volatility takes their stock price down below 1 times of MNAV. And at the same time, it also allows them to go out to do potential acquisitions, which is something that Tom Lee has spoken about in some podcasts, but more on that in another video. And on top of this, if you count their Bitcoin holdings as well as their moonshot investments, you will get the total net asset value coming in at around $12.6 billion, which also works out to a net asset value per share of $32.75. And that is how you get a MNAV today at around 1.04, 1.06. Now, moving down, they actually first purchased Ethereum on the 9th of June 2025. This is something that we have spoken about previously. Since then, there has been a total of 177 days. And based on the number of Ethereum that they have on their balance sheet, they are accumulating Ethereum at around 21,053 Ethereum tokens per day. And what I'm going to be doing is to use a fairly conservative estimate over the next 3 to 4 months. So, assuming we project this out to the end of 2026, which is 31st of March over here, with a 20% margin of safety, this would assume that the rate of accumulation would fall from currently around 21,000 Ethereum tokens per day to around 16,800 Ethereum tokens per day across the next 118 days. 118 days, which is the number of days between today and 31st of March 2026. This makes the total number of Ethereum potentially being added onto their balance sheet come in at around 1.98, let's call it 2 million Ethereum tokens, which bring the total balance of Ethereum on their balance sheet by 31st of March come in at around 5.7 million ETH tokens, very close to their target of 6 million. And my assumptions over here are going to be pretty conservative because, like I've mentioned before, I haven't been super deep into the history of crypto and crypto cycles. All I know is that right now people are debating about whether or not the 4-year cycle is still valid for Bitcoin or has that been invalidated. And I can see the arguments to both sides of the story. However, one thing I do know for sure is that Ethereum hasn't always run according to the 4-year cycle. But if Bitcoin continues to show weakness in its price action, I don't expect Ethereum to do well by itself. And so because of that, I'm using $4,000 in March as a price target. This is much lower than what people out there are saying, 7, 8, 9,000 kind of price targets over the next couple of months. Even if I just use $4,000 in terms of Ethereum's price by March 2026, you actually get a value of Ethereum by then of around $22.8 billion, right? And if you consider that they will have more or less the same amount of cash on hand, around $800 million or so, this would put the projected net asset value coming in at around $23.7 billion. Now, the reason why I am expecting BitMine to hold on to around the same amount of cash on hand is because it seems like this cash is either going to be used for certain M&As, otherwise it's going to be there as a buffer should there be market volatility that they will want to deploy this cash to buy more Ethereum and to increase their MNAV. So that is the assumptions that we're going in with. And finally, one of the biggest changes that I've made is in terms of the dilution numbers. Now, previously, the numbers over here that I've used is a 50% dilution in the bear case, 40% in the base case, and 30% in the bull case. However, I've changed this to only 40% dilution in the bear case, 35% in the base case, and 30% in the bull case. Now, the reason for this is that previously, when I was using the shares outstanding number, I was going all the way back to August of 2025 because of the long period of time between August and March. That's why I felt like I have to use a bigger number for dilution. But because we know right now, as of 31st, oh my goodness, 3rd December 2025, they have around 3.8, oh my goodness, they have around 384 million shares outstanding. So between now and 31st of March, I think it's comfortable for me to say that dilution between now and 31st of March in the bear case would be 40%. And then I basically narrow the range, right? In the base case would be 35%, and in the bull case, 30% dilution. And so what you're seeing over here is that in the bear case, you're going to have dilution of 40% with an MNAV of 0.9. And even with all the crypto liquidations recently, we are still seeing BMNR being able to hold up their MNAV above 1, except for a couple of days. And so because of this, I think 0.9 is a fairly conservative estimate between now and March of 2026. In the base case, MNAV recovers to around 1.5, which is where we were before all this liquidation event, and as well as the bull case, which is around 1.8. I've actually lowered the MNAV in the bull case down from the 2.2 that we have counted previously using Tom Lee's valuations. And I've really lowered this because I want to account for the kind of volatility and uncertainty that we are seeing in the markets at the moment. Now, in the bear case, the projected net asset value would come in at around $44.15. And if you apply the 0.9 times MNAV, you get a BMNR price target of around $39.73. Moving on to the base case, with the projected net asset value coming in at $45.78. With a 1.5 times MNAV, you get a price target of around $68.67. And in the bull case, with a net asset value of around $47.50, 1.8 times MNAV, you get to a price target for BMNR at around $85.58. And so what I've done is to take an aggregate of all these numbers to get a price target of around $64.66 by March of 2026. Now, from today's prices, this represents a 92.7% upside. From my own personal price target, from my own personal cost basis, this would represent anywhere around a 40 to 45% upside from here. I know this number over here, $64.66, might disappoint some of you, but I actually feel very comfortable with this number over here. I know it's not as high as some of the projections out there. It's not even as exciting as some of the projections out there, but I'm using extremely conservative estimates. And for me, with my position, like I said, this would represent anywhere between a 40 to 45% gain over the next 4 to 5 months, the next 3 to 4 months actually, which is why I'm not going to complain, right? Of course, for people who have perhaps bought this in the high 50s or even $60, this really might not be the news that you want to hear, but conservatively, this is how I look at its valuation. However, I do believe that Tom Lee's target of $7,000 to $9,000 is not completely out of the question, perhaps not by his timeline, which is January of 2026. And one of the reasons why I believe it has to do with However, I do believe that Tom Lee's target of around $7,000 to $9,000 is not completely out of the question, but perhaps not in the timeline that he has specified, which is by end of January 2026. Now, of course, one of the reasons why I do believe in his price target has to do with this analogy that he has made previously with Nvidia, and I have spoken about this previously. I will link that video down below, but I plan to do an updated version of that video later on because there are some changes in my calculations. So if you haven't seen that video, I'll be linking that down below, but be ready because I'm going to be updating that video in the next couple of days as well. But another possible reason for the potential price explosion or the step function change, as Tom Lee would call it in Ethereum, would be the Fusaka update on 3rd of December 2025. If you're watching this video at a slightly later date, you would have seen the Fusaka video linked at the end of this video. But another possible reason for the price of Ethereum to run has to do with the Fusaka upgrade that is rolling out today on the 3rd of December 2025. But I'll be speaking more about that in the future video. And with that, I'll see you in the next one.